Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look again on euro currency. So, as usual, we have prepared a report. And this report, the major topic that actually is interesting to us is what will happen with the rate of the euro to United States dollar. And a lot of talks about the parity and moving below the parity. So we also keep it in mind, but we also are interested in what the real factors could act currently and why we should still expect a possible drop in euro. Because some banks, big houses, great houses, I call them, actually already made some statements that it seems that currently Donald Trump trade is exhausting and dollar could turn to some sideways action or even to pullback. So Nomura have taken about this Bank of America and some other banks. And our analysis tells that actually they're not really far from the reality. This really could happen. But this is mostly technical stop, technical pullback, which will be short term. In the longer term, the big disparity that we see currently between the European Union, its economy, and what's really going on in the United States is rising. So yes, United States also has really big problems, but at the same time, they have constant inflows in the economy, and second, they have some safety margin in the deposits of the United States Treasury and the Fed account, which is approximately $700 billion, which gives some reserve and ability to, well, feel relatively comfortable in the nearest time. So if problems will come, they will come in 2025. We will see them. But European Union is already on the edge of some panic. So if you haven't seen the recent statement of the European Central Bank, we have brought it in the report. Recent statement of the Central Bank of Germany, we also put it in the report. Some other moments, assessment of the economy by the German banks, such as Deutsche Bank in particular. All the stuff we have put on report, and combining all this information, statistics and other things, we think we do not see any reasons that the current tendency should stop in the nearest few months, and the chances to reach parity in even lower levels that we suggest. We see 90 level below the parity on the euro currency. And this comes from the technical tools. Currently, it's really absolutely possible, and we do not see any signs that makes us to change our opinion for now. At the same time, in the shorter term, we indeed will talk about the possible retracement. Something that has been mentioned by the Bank of America, for example. But they were speaking about dollar index. We will speak about the euro currency, but this is very similar. So what we've got? Actually, we've got all things that we discussed on Friday. So recall what we said. The market probably will change the lows, 104.50 lows. Once the stops will be triggered, market will drop lower. Mostly this should happen because dollar index hasn't reached complete the OP target. And here's bingo. The dollar index, if you will see, has completed the OP. Besides, on the dollar index, we have a bit specific situation where the daily ABCD OP and the weekly peak OP stands in the same point. So now the target has been completed. As euro currency, as dollar index currently overextended, as on the weekly, as on the daily chart. So dollar index, it's overextended to the upside, euro currency correspondingly to the downside. So from the technical and probability point of view, so of course different geopolitical risks, financial risks now exacerbated, but we're speaking about technical picture, and we have actually healthy background for possible moderate pullback. It's tactical pullback, it doesn't change overall fundamental background valuation of the euro currency. But from the technical point of view, market needs some relief. And that really could happen because major target has been completed, and it has been completed right at the overextension level, where dollar index stands overbought here, euro count stands oversold. So that's why we will consider the possible corresponding trades here. So obviously on the daily chart of the euro currency, we see that an area around 106.70, 107 is a great chance to take the short position, because this is confluence resistance and this is also daily overbought. Besides, if you take a look at the weekly chart, you could treat this downside action as a nice thrust, and potentially it might be weekly brand by the sell. This is for a perspective of the 1-2 weeks, if we will get some more or less active pullback. That's actually the first trade that might be done if you trade on a daily, weekly basis and you wait for a pullback to get the short position. Speaking about long entry, there are two options exist. The conservative option is to wait for a pattern, as we already talked about this many times. So for instance, take a look at the 4-time frame chart. That might be kind of the hand shorts, because we do not see yet healthy reaction. Market is still calling around the level that has been just achieved. But you should recall that on a daily chart, on a weekly chart, euro currency stands at very strong support. So take a look. It's weekly oversold, completion of the weekly OP, and take a look, 50% support. So this is agreement, and this is weekly stretch directional pattern, suggesting some pullback here. So all the stuff together gives us ability to consider, well, a bit more risky approach, but still in the current circumstances, it is not as risky as, for example, might be on the last week. Mostly because targets are completed and market at oversold. So what I'm talking about, on the 4-time frame chart, as I said, it might be first option is to wait for a pattern. Maybe some different pattern will be formed. We will see. But currently, it might be recognized only some kind of hand shorts. On the 15-minute chart, on a 30-minute chart, you could watch for chance to take position based on a recent pullback. And here you could consider some levels that stands most recent upper direction, where you could consider thinking about taking the long position with the stops against these lows. Yes, this is more risky, this is more chances to get the loss, because you're trying to step in when against the big momentum and a moment of the first bounce, where market will be still volatile and the bears still will make some pressure on the market. But at the same time, if market would keep going higher right from these levels, you will get the best result and you will get the best point. These two options are not mutually exclusive, so you could follow as first one as the second one. Besides, you could adjust your risk with manage your position size. So for instance, if you still decide to deal with this stop, you could just decrease the trading lot that you will trying to use. But as I said, from the technical point of view, the background exists for starting watching for some bullish signs here, see what reaction on market will be. So that and towards what we have. Let's see what will happen next week. It will be a bit specific due to the Thanksgiving holiday. Maybe market will be not as liquid as usual, but well, based on the current situation and technical things that we have in place, and next week promised to be interesting.